Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. My name is Seth Krussman.
And I'm Ben Brayshaw.
So if you are, in fact, a first-time listener, we want to welcome you. Our second-time listeners, welcome back. Third or higher, Ben is hosting a party at his house this next week. You've been invited. Just call the office and you can get the directions from us. Hey, we're glad you're listening. This is Money on Tap. And what do we hope to do here? We're going to talk about personal finance. Your investment dollars going to work for you through a concept that we developed called three-dimensional investing. Ben, what does that mean, three-dimensional investing?
Well, it's a concept of bringing together all the different facets of tax planning, investment planning, estate planning, all the different dimensions inside all of that, from, insurance, fee-based planning, brokerage, all of those different pieces in a kind of a multi-level three-dimensional asset in class, and making sure that all the different parts are coming together in a way that are circumnavigating your concerns. And I think that's where a lot of people aren't getting the full picture in the financial planning world. We meet so many people day in and day out who are doing one thing really well or doing a few things really well, but they know that there's a number of concerns that they haven't felt like they've met, or they don't feel like there might be something missing or something they've overlooked, or maybe they're making a mistake and they're not even sure. So some people are doing it fine and they still are living in that realm of fear. And that's where three-dimensional investing, and you have somebody who has all the tools, all the knowledge, all the background to say, one, either affirm where you're at or to improve where you're at. Yeah,
I like that. We are independent financial planners too. That's what Ben and I do. We're partners. Brayshaw Financial Group is the name of our firm. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. You can also find us at Facebook, 3D Investing. I'm also on Twitter, folks. My name's Seth Krussman, and my handle there is at BFG_LLC. So we're kind of like aggregators of information of just like what's going on in the industry. We are watching headlines consistently and constantly, as well as using a lot of what we find to be time-tested and proven methods to putting our clients in the best position possible to have a successful experience. And so we're going to try to pull that into a show that we call iRobo. And we have a lot of people that come to us with the do-it-yourself mentality. We love it. We encourage it. Everybody at some point in time has to put on the hat of, I'm going to start to plan for myself.
Yeah, DIY. People do it all the day, and we know it, and we're the ones that kind of try to help you through that process.
Right. So one of the things that's happened is technology. It's around us all the time, and a great facet of it is called the Robo Advisor platform, and it's relatively new in terms of what's happened in the investment world. If you haven't heard about it, it's here we go. We're going to dive in. We're going to have some fun with that. Probably turn into a 2-show series for us here, because there's just a lot of information. We're going to cover the kind of the underpinnings of what it is and what are the components and how does it work. But also we're going to head a little different direction. I think that's going to take us into some of the risk.
But also, Seth, we're going to talk about some of the pros. One thing about Robo is that, there's a lot of conversation about how financial planners and advisors are scared or don't like Robos and stuff. We've been using Robo Advisors for 20 years.
Right.
And the fact that they've become made known for the public is just a new resource. And we're going to talk about some of the pros that have really helped the DIY and have really helped the DIY get to a point where they honestly do need us. Right? Because, there's a point in time where we are not financially a viable solution for somebody starting out. And so having some of these solutions is really, a very good option for a lot of people.
Yeah. And where I was heading was that with that was mean variance, because it's a fun concept to throw out there, and but basically we're gonna get under the hood here a little bit on like how does it work, and that's gonna boil down to what we do. We embrace technology. We're gonna get there. We're gonna embrace technology, but before we get there, we're gonna spend just a couple minutes, folks. Money in the news.
So today in Money in the News, Seth, we have a really, really interesting article that is kind of a trend changer because of tax laws. What happens in our industry repetitively all the time is that there is some invariable change, whether it's, political or taxes or something along the lines that really shifts the gearing of how people think to invest. And tax laws are the number one driver, whether it's current or future or expected tax laws or what might happen tax-wise, is something that drives a lot of consideration. And, one of the articles that kind of is driving me into this conversation for Money in the News is one that came out of the Wall Street Journal about how more Americans are investing in municipal bonds more than ever before. Like it's just totally turned into a craze. And the reason it's turned into a craze is because the tax laws have changed. And it's happening more and more in the kind of like the blue states, as we call it in the political realm, because of the SALT tax changes. The fact that we can only deduct $10,000 on our state and local taxes. And so a lot of the states, specifically California, who has a 12% state tax, they have all these taxes, and they're trying to revamp how they invest, and they're looking at these municipal bonds, and they're looking at the tax relevant returns and the kind of the tax-free returns. Now, not all muni bonds will be tax-free just because you bought them, but if you accomplish purchasing the right muni bonds for yourself, you can potentially get to an entirely tax-free distribution. But that has really shifted, change and so forth. But they were saying in this article from the Wall Street Journal that between, he said, exchange-traded funds containing California, New York, and New Jersey munis have received a combined total of $6.5 billion in inflows this year through the end of July. Mm-hmm. $6.5 billion. I mean, these states have huge state income tax. These people have large incomes. They're dealing with major taxes, and this is a major change.
Yeah, most since of any 7-month period since 2014.
What's really interesting here is that the vast majority of taxpayers, in the tax changes that occurred with the Trump tax code, most people got a tax break. Okay, most people got a tax break. Like, for instance, the automatic deduction went from $12,000 for married filing jointly to $24,000. So if you're renting a house or renting an apartment or something like that, and you don't have a lot of write-offs, you would automatically get this deduction of $12,000. Now it automatically went up to $24,000 for doing absolutely nothing, which helped a ton of people who are really kind of under that burden of taxes. But it definitely highly impacted the top 12% of those who make incomes over $1 million. So what's funny is that we have a very democratic presence in our country who says we need to tax the rich and help the poor. And the tax codes did exactly that, but everybody's complaining about them. That makes too much money. And it was basically, and when you look at the political realm, this was basically a blue state target tax cut. I mean, if the Connecticut's, the New Yorks, the California, the Jerseys, all the big state income tax states got hit the hardest. And it's kind of an interesting thing, but this did exactly what every Democrat is requesting inside the tax world, is to tax the rich more heavily and relief to the lower income families. And this is exactly what happened, and they're all upset about it.
We should be. I mean, we should certainly be upset when we get what we've asked for, because it's not being, it's not being spun the direction of the narrative that we would like to go ahead and support. There's, we've seen a lot of other things too, in terms, not necessarily the municipal bonds, but just its strategies that people are trying to deploy to use the tax code to their advantage. Yeah. And this is what we do all the time. We have deductions or now we don't really because we just take the standardized
20 some odd percent of America went from, itemizing their deduction. They said down to about 7% of America now itemizes. And
simplification is great.
Yeah, I mean, it is great. And I think that's a huge win for us as a country. But, when you really break down kind of what's going on, muni bonds are not the only way that people are manipulating their taxes.
And that's where I was going with this. I mean, how many people have we talked to that are, the sole proprietor, had the LLC and have now converted into a corporation or something like along those lines?
Yeah, I mean, there's some of that's going on. We've used other investments outside of muni bonds that are, probably not radio ready because they're for, either accredited investors and so forth. But
we could just go ahead and get it out there and nobody will ever hear the show.
Yeah, we'll never get approved by compliance. But
here comes the beep, folks.
Beep. But there are other things you can do, and the wealthy are still twisting the way their money works. See, this is the thing that a lot of people don't really process inside understanding taxes and how taxes work. When you're going from point A to point B, and you hop on your Google Maps, right, or your Google app or whatever, it says you can go this way or you can go this way, and it's 25 minutes slower, but there's no toll booth. And so no toll booth. So well, what's the toll booth? That's a tax, but it's faster, it's easier, it's quicker. Right. So when you actually start doing planning and you avoid that toll booth, there's ways and reasons why that becomes more valuable for you. Because if the toll booth is $10,000 to go through, you're like, I'll spend the extra 25 minutes going through it. Right. But for most of us, the toll booth is so insignificant that the fastest, easiest way is what we do. And so that's really where financial planning comes into play when we work with a lot of people who say, hey, listen, I'm really not sure that I'm paying a fair wage in the tax. I think this toll booth might be way too expensive for me. Can you take a look at this?
Yeah. Or, I mean, since we don't have toll booths over here in Oregon and Washington.
You don't? I didn't know that. You don't have any toll booths at all?
There's maybe one that I can think of.
Okay.
In Oregon, and it's called the Bridge of the Gods.
Huh.
And it takes you across the Columbia River. I got one of these. I was up in Seattle, and I got I still have one of those bills. Like they snap a photo and they send you the bill. Yeah. So there was one of those they converted up in Washington, but that was the most recent that I've seen. Not a whole lot of that going on over here. We just don't use that as a system here.
Oh yeah, we do a lot of that.
I was going to use the Starbucks comparison here, where there's the line out the door at one Starbucks, and you walk around the corner to the other one that nobody's at.
It's bizarre. I've been out there and I've seen two different Starbucks in the same strip mall. I think that is hilarious.
Oh yeah. We have it inside of Fred Meyer's or Kroger, and then there's another one in the parking lot right next to McDonald's.
Yeah, you can't find enough baristas over here.
Or Chipotle.
Yeah. So, but I think one of the things about the whole concept here is muni bonds is a very common place that a lot of people go for tax-free income and to avoid taxes, and that's what this article is all about. But knowing that this is not the only solution, there's other ones out there that people are utilizing. This is just interesting because there's a dimension to this, and this is where the three-dimensional process comes in. Is that if there's inflows to muni bonds, there's outflows from other items. Right? Mm-hmm. There's money moving from point A to point B. I was looking at an article the other day, and I wonder if I can find it quickly. And it was saying that, where is that? Oh, here it is. Yeah. So from 8/5 of 2019, the S&P roughly did about 2.5% for the year, August of last year to August this year. And I think the S&P just went negative this month in August for the last 18 months, which is crazy because you talk to people about that. Yeah. But they said that the U.S. long treasury, the SPTL, for the last year has done 19.8%. And then the U.S. aggregate bond is up 9.1%. And there's a massive misnomer about what the market's doing. And I think our industry does a very poor job at really communicating kind of how performance is. All they do is talk about great stuff or horrible stuff. But they never talk about what the real market overall is looking like. Like, for instance, one of the best performing sectors. Did you get that article I sent you? It was just interesting. In 2018, the best performing sector.
Yeah.
I asked somebody the other day. I was like, what's the best performing sector? And then one person said, I think it's real estate. And the other person said, I think it was small and mid cap. I was like, actually, it was cash. 2018, the best performing sector was cash. The next best performing sector.
Everybody that's holding onto their mattress right now is saying, I told you so.
Yeah, and the best performing sector in 2018, second best was bonds. It was only up 0.01%. And it's just interesting because I said to somebody, I said, you give us money to make you money in the stock market. In 2018 was horrible. I mean, we lost all the gains at the end of the year, and then boom, we had this rebound, and now we're having a pullback, and it's it's crazy. It's all over the place. What's interesting though is year to date, August 5th to August 5th last year, cash was up 2%, and international stocks down 6%. So there's a lot of misunderstanding of what's going on in the market and trying to manipulate. So, but what's interesting with the bond market and the notice of the Treasury is that you're seeing people move money out of the stock market, the equity portion of the stock market, and moving it to the bond portion, like these muni bonds. That's where these inflows are coming from.
Right.
And so that's going to force
and understanding that.
trouble.
I think the code around this is like, there's this, we talk about the supply and demand a lot. We talk about the aging population, where they're going to go for income.
Yeah.
There's a demographic story, but this is really, supply and demand economics. You see a squeeze, or we call it, like a tax squeeze. We talk about that and the potential in the future for there to be this tax squeeze, because we need to find money to fund our government from someplace, and we sure print enough of it, but we're
trying to get China to give us some more to run it.
We got to find it someplace. But as you squeeze one section of the code, it pushes in another direction. And so recognizing what is happening, like using the map visual again, is you look at your map and you can see the red up ahead of you,
right,
and the slowdown for 12 minutes. That's very similar. You can see these things coming if you know what to look for and where to go ahead and take that next exit. What's the alternative route to get where I want to go? And where is the bulk of the population in this sector going to go? So we can take a look and we can ride some of these inflections.
Well, and then the other side of this, Seth, is that, for people who have the forward thinking of like, hey, listen, this tax code happened. People are going to pay more taxes. People are going to need to look at more generous tax investing strategies. Muni bonds is a great place to go. Well, when taxes relieve themselves, maybe in a SALT tax, maybe a reversal of this tax, what's going to happen? Money's going to flow out of muni bonds, and it's going to flow back to potentially equities or maybe just, U.S., large cap bonds, kind of the big large cap companies. And, because they not worried so much about the tax code issues.
Yeah,
the corporates. So that's where I think, people have to have a little bit more forward thinking inside how, cause and effect are going to really impact how you invest. Right. Mm-hmm. So when a cause like a tax code change is going to change how money flows, and if money flows from point A to point B, or if inflows into the stock market, where people are going to direct those. Consumers, especially people who are tax incentivized, they will make changes quickly. They see something and boom, they're gone. Anyways.
Well, this show got far too educational, far too quickly for me.
Yeah. I think our next article might lighten it up a little bit.
Oh, I hope so. So, what's going on in the world of food? Because that's where I live. Vegetarians and vegans who are now butchers.
This is okay. So this is a business article. This person's making some serious dough. Okay. But this vegetarian became a massive butcher, and now they eat meat. But the whole business plot here is really interesting. Miss Kavanaugh, she owns a small, successful butchery, and she's revolutionizing the current food system, as they state here. Basically, she's only butchering grass-fed animals that are raised in some sort of environmental conservation, and she's less wasteful than all the other butcheries, and she doesn't use the non-antibiotic animals.
Right.
And it's a trend. It's a business trend. So people are spending a significant amount of money more on loved animals to eat.
Miss Kavanaugh is what the article is kind of revolving around here. This is New York Times, folks. She was a vegetarian for 10 years out of deep respect for animal life and the environment. She says that she became a butcher for exactly the same reasons. She's only 30, very small but successful cadre of like-minded former vegetarians and vegans who are becoming butchers in hopes of revolutionizing the current food system in the United States. I can totally identify here. Okay, so this takes me back 7-8 years. I don't even remember. At one point, Kira's my wife, but we were watching some Netflix shows, and I have a family member who's a vegan to the point of it's a religion. Every time we have a family gathering, there is some kind of a conversion happening around a table. We were paying attention to what she was saying. We watched some Netflix show. We could not believe the inhumane treatment of animals. It was so sad. And so I was vegan for like 2 days. I tried. but just in time, I watched another video on paleo or something like that. And I just totally converted over into what I really, truly love, which is a lot of protein and fat. And anyways, but what it did do for me was this, is Kira came to me and she said, honey, for my birthday, I want chickens. I will do anything for my wife. And I built her what's called a chicken tractor. And this chicken tractor is a mobile chicken coop so that you can have fresh foraging for the animals. It could hold like 15. Well, I wound up with 50 chickens because as we're picking out the chickens, Kira's there's one over here in this bin, and there's a lonely one over there in that bin, and so I've got like 20 chickens by the time we're done. Now, we didn't figure out that you could just take one from that lonely bin over there and put it in with the rest of them, and it would have been fine. Like they would have said, "That's my brother and sister chicken." They would, no, we bought them all. So I had to convert pasture land and all sorts of stuff and turned into a chicken farmer for a better part of, I want to say, 2 years. But we raised all of our own poultry, and it was this idea of being humane and really knowing where our food comes from, I think, is where it circles back to what's happening here. And I really appreciate that people want to know, where is their food being raised, how is it being cared for, and being humane with that. I think that's a beautiful idea.
That is. We just go to the local farm and buy half a cow.
That's it.
That's what we do.
That's our solution today.
I don't know how it's raised.
I know my farmer.
My wife says it doesn't have antibiotics. I'm good with it. I don't care. I mean, I'm happy to go to the local Shaw's or Hannaford or Piggly Wiggly or whatever people are looking at these days. Anyways, but it's interesting. I mean, there's just so many businesses in so many different ways, and I honestly think that there's some real value in this. As much as I'm laughing and having some fun with it, it's remarkable that people have made businesses out of this, and it's, I do think we need to take care of animals honestly with integrity. I think we're called for that. So
yeah, one more. Do we have time?
Oh, sure.
All right. So this is from the Wall Street Journal, folks. Apparently, speaking of trends, we're talking a lot about trends in supply and demand. Steakhouses are looking for the next big thing, and they are hoping to lure you and I to their diners with a new hook. And the new hook is old beef.
Huh.
Old beef. Apparently, we as a consumer need to eat more old beef because it's chewier.
Is it like aged cheese? I'm being serious. I really don't know.
I don't know. The longer you set that cow out to pasture, the more flavorful it becomes. I think that's true.
Oh, so it's like the animal is old. I gotcha.
The animal's old.
Oh, okay, gotcha.
Yeah. No, this is not like the aging process of hanging it in the meat locker for a month or more. No, these are old animals that are coming to your table. Old animals need to be eaten too.
Absolutely. We'll give it a shot.
We're going to take a quick break here at Money on Tap. That's going to do it for us in Money in the News. You can reach us at 855-226-8551. We're going to come back with iRobo.
Hi, my name is Seth Krussman, partner with Brayshaw Financial Group and one of the co-hosts of Money on Tap. One of the biggest concerns and largest expenses people face today is taxes. Without thoughtful planning, taxes can destroy future retirement dollars, eliminating the possibility of a timely retirement or dreams of what you want retirement to look like. If you're like most people, you're getting closer and closer to retirement, and you may be wondering if you're taking the right steps. Will my income be enough? Will rising taxes force me to give up my dreams? How does inflation factor into all of this? These are real concerns, and you're not alone. Putting a plan around your financial future is what we do. If you have questions when it comes to your financial security, and if you're looking for a personalized solution, contact us at Brayshaw Financial Group, 855-226-8551. It's time for you to start getting answers to your questions. Headquartered in Bedford, New Hampshire, Brayshaw Financial has offices across the country. We'd love the opportunity to show you how we can help. There's absolutely no cost or obligation to meet with us. Call us at 855-226-8551. 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we're doing on this show. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. If you like what you're hearing here and you're on the podcast, or if you are looking for that podcast for your next great find, you can find us at Money on Tap. And we appreciate the comments, the feedback, the downloads, the likes, all of that stuff really helps us get this message out to the public, which is part of what we're here to do. We are talking about Robo Advisors. And where does this technology fit into your planning and working with us as financial planners in this industry towards your goals? And ultimately, retirement is usually what that means. But yeah, we're gonna
jump
get
right
under
in.
the hood.
Yeah, no. I mean, that's one of the things a lot of people say to us. I hear about Robo Advisors. I hear all sorts of different stuff. And what is it? And we've done a show on Rise of the Robos. We've covered this topic a little bit. We continue to see it evolve. We continue to see positives, and we've seen some kind of negative drawbacks for different people in different scenarios and stuff like that. So, one of the things that we talk about is, what is a robo advisor? And I think, and how has a robo advisor really come to be? And I think the thing is, for us, the robo advisor started in the early 2000s for the financial advisor world. And we've had access to it for probably close to a decade without it really becoming open circuit for kind of the general public. But that's been kind of the movement that we've seen in America, right? I mean, so for instance, we've went from, going to a bank teller and talking to the person and doing our deposit and having a deposit book. Remember those deposit books, Seth? Did you have one of those when you were a kid?
Yes, I did.
Yeah. But now we have ATM machines and we do deposits. And now we have phones, and phones have moved, and we have slowly moved farther and farther away. I was actually talking to a gentleman the other day. He's like, I haven't been in a bank in, I don't know, years.
I went to the bank that I grew up doing exactly what you just talked about with my parents, and going and putting my money that I was earning into the savings account and the deposit book and all of that. And it's vague. It's so empty.
Oh,
there's two teller windows and maybe one person standing at the teller, or two teller windows open, but there's probably a bank of 20 teller windows.
Right.
And it used to be humming like that.
Oh yeah, absolutely. You were in line. I remember waiting in line.
Yeah. What's that?
In a bank. But just like even shopping. I mean, we don't go to the store as much. We use Amazon and online, and we're very much a society of trying to figure out how to do it remotely. Right. And that's kind of without service. So it's a mentality that has been bred, and they're trying to see where it plays. So in the robo world, what is a robo advisor? It's just basically a digital platform. It has an automated algorithm that evaluates your risk tolerance. You put in some goals, you put in some hopes and dreams and what your income is and what you're saved so far and what you project to save and all these different little pieces. And it tries to come up with a plan for you that will accomplish whatever the goals are that you said, which were maybe a financial planning, or retirement planning, like whatever that kind of generalized focus goal. They'll try to, I want to have, $50,000 a year from this investment when I retire, and they'll say, well, this is how much you have to, put into this program, and this is what you'll need to do, et cetera, et cetera. This is very interesting because it misses a lot of items, right? There's a lot of different things inside the robo world that, you can't get. And that's empathy, sympathy, concern. Like there's some of those things that are missing. But on the opposite note, those things are lacking are also helpful because emotion drives a lot of fear in the market. And fear causes sometimes unnecessary trades and worrisome trades. The stock market drops and someone pulls their money out. Right. And so some of this robo-advisoring, and choosing, what you're going to be in is what it will direct you to an investment that says this one is correct for you. Right, Seth? I mean, it's just like, hey, here's a time-dated fund, or here's just a passive income, passive index fund for you. And you're very much engaged in saying, well, this is the right choice. And people get this feeling of assurity that I'm in this, very low-cost, very simplistic investment. Now, that has really helped a lot of people get past the emotion that they, as a DIY, they're able to push that emotion off to someone else, right. In their mind. So like,
hey, you do it for me.
Yeah, so the Robo is doing it for me, and that is actually a really helpful thing, because people investing their own money traditionally fail more than they succeed. And there's a statistic out there, and I don't have the numbers, but the majority of people fail, and the reason they fail is because there's an emotional tangent. Fidelity actually had an article, and then I think we talked about, what was it?
I love that.
3 months ago, 6 months ago, whatever it was, and the Magellan Fund, I think, had done astronomically well, but the people who were in the Magellan Fund had not, and it was because of how many times they had pulled their money out and put it back in. They always did it on the opposite
there's another
side.
one that we've referenced in the past of what are the most successful investors with Fidelity, and they went back and they actually call them up and they're like, hey, what are you doing? And they didn't even know they had an account. They put the money in, they forgot about it.
Yeah.
And I think people want to do that in general, because and do that. And that's kind of where this Robo Advisor comes along and says, hey, we'll help you do that. This is the set it and forget it. We're going to get your profile, and then we're going to go ahead and use this technology to fit you into the mold that you're telling us that you kind of should be, and that's based off of how long, that's hot time horizon.
Yeah,
that's very common.
It does the risk tolerance, the time horizon, the investment objectives. It asks you all these questions, and it really gears you through. And a lot of the program and software work that we have in the background asks all those things, because they want to make sure whatever we're putting clients into or how we're handling it, that it's falling inside those same things as a computer.
Yeah, because we don't want to get sued.
Yeah, we don't want to get sued. There's a background check on all this stuff. So they make sure what we're doing and what the client has stated and so forth, that they're still in line.
Right.
I had a client the other day ask me, well, how do you know that my portfolio is the same risk tolerance of it? And I said, well, we have this back-end system, and it looks like a half a pizza, and there's 5 slices. And there's a diamond, right, Seth? There's a little diamond on the moderately aggressive tab, and it might be 2/3 the way over, and it will tell me yours is like not quite 2/3. It might be 60% the way over, or 69% the way over. But it tells us where, hey, you're in the ballpark, and that's the best they can do. We're allowed to be within an entire slice of pizza, and sometimes we can move up or down depending on a specific stated concern. But we have these comparable tools to make sure that, hey, everything's kind of in sync. Mm-hmm. The Robo Advisor is trying to accomplish that on a completely technical scenario, on really lining you up almost exactly. Now, let's talk a little bit about the history of the Robo, right? So the history of the Robo Advisor, it was first launched in 2008 by Betterment. Okay, and they didn't even start taking money until 2010, and the entire purpose of the creation of the Robo was only to rebalance assets within the target date funds. Mm-hmm. And it was a way for the investors to manage their passive holdings and the kind of the buy-hold investment strategy. And what they realized was that there was real activity. There was real interest in this, because, in today's world, the client has moved to like indexing strategies, and the concept of the modern portfolio theory, evaluating your risk and kind of understanding what you want to accomplish. Do you want to be socially responsible in your investing? That's a question. And if you do, it will kind of re-steer you entirely into something like that. They've even branched out into tactical strategies, and just creating all sorts of different areas to help leverage concerns and fears. But there's a big disconnect. And the question is do you need the bank teller or not? And the question, a lot of people, this is the $1 million question. Are we a transaction business, or are we a help you through it business, right? Can you go to a doctor and get care to have your heart done, or are we going to create a robot that can do it well enough? And the question is you want the doctor over you, because if all of a sudden something starts bleeding out of the blue somewhere and you don't realize what's going on, it's like you need somebody who can do kind of multi-level thinking, and maybe our robos will get to the point where we can do that. But I think that no matter what, we're always going to want the doctor there. And
I was kind of likening the experience to I don't know, go back to 1980 whatever, when you would call anywhere and somebody would pick up the phone and answer it, right? Or vice versa today, when my phone would ring, I would pick up the phone and somebody would talk to me.
Right.
And that's I mean, and you know, technology works to be efficient. It lowers costs, and that's all factors that are good and fine. But I mean, if I have, again, that's the kind of like the real solution. If I really need something done, I mean, if I need something done, then I go to a person. And the so what goes behind this, behind the technology? I like to get into like how does this work and why? I mean, this is a great thing. The technology is fantastic because it is allowing more people to participate in something that has been out there untouchable for a long time. I mean, if you go back into the history of what did let's go back to 1945, 1950. How did you retire? Well, usually it was a pension at that point. You know, you worked for a company for 25 years, and they gave you the pension, and that was the retirement solution. But as an individual investor, you had to know somebody. You had to pick up the phone and call them, and you had to rely on their research to buy the individual idea, the stock or the bond. Those were the two players that they used. Now, if you fast forward that into the mutual fund, which was the basket of stocks, which was technically supposed to lower risk, right?
Yeah.
And that's where that came into play. So this is one step forward, one more step forward into accessibility, risk mitigation, or risk paradigm, or understanding what it is, what your risk tolerance is, and how to allocate towards that and ultimately towards a goal. So it is very one-dimensional in terms of it accomplishes one goal and pretty much one goal only. And it does that in a way that through technology that automates it. The trading behind it, the rebalancing behind it. When we say algorithm, what does that mean? Well, algorithm is basically, you could take it as very simple approach. An algorithm is a step-by-step method of solving a problem. It's commonly used in data processing, but you can even take a look as simple as algorithms, a recipe.
But Seth, I mean, when we talk about these algorithms, right?
Right.
I mean, the only thing that catches the errors in the algorithms and the technical analysis that's going on inside of these things, right, is a human.
Yes.
Right. So
it's created by humans as well.
Right. So it's fallible. And that's one of the things that I think is the biggest concern, right? Is to understand where the fallibility is, right? If you're gonna say, "Hey, I'm gonna put myself in," there's a great opportunity here with robos, right. And I think people should embrace robos, and I think we have embraced them as well. But I think you need to embrace a robo because you need to have a robo to get you off the ground for the most part, right? You need that. That's basically what a 401k plan is for the most part.
I 100% agree. That's exactly where I was thinking is like anybody that has a 401k and they say, hey, I've got to put my money to use, you can either pick that target date fund, which is that's the set it, forget it. I want to retire in 2050, 2055, whatever. I put the money towards that. Or you can say, I want a little bit more of a personalized approach based off of my risk. Mm-hmm. How much volatility, how much can I put out there? And, if the account goes down 10%, am I okay with that? Or do I totally sell out and I'm gone out of the market and I'm never coming back until it looks like it's, good again or something? That's kind of the risk mentality and investor mentality around that. But there's an automation around that.
There is. I mean, I guess where I was going with the whole thing, Seth, is that there is a very valuable tool here that we need to embrace on a certain level, and they're continuing to revamp and develop this tool. I mean, they've sophisticated it to the point where now we have tax loss harvesting, and we've got some retirement planning tools inside there, and so forth. And I think when we start getting into like the end result piece, like the accomplishment of success that you're trying to talk about, like specific retirement, I get nervous there.
Sure.
And I think the reason I get nervous is because really understanding the three-dimensional concerns that people have, checking off a few boxes is saying, like, listen, I need income, I'm low risk. And, there's just not enough detail in creating really a very dimensional portfolio that kind of embraces multiple events that financially can devastate you in a retirement process, okay, right? Because you have one. This is the thing that people don't understand. When you're 25 years old and you open up a 401k and you buy a target date fund, it doesn't matter, right? You got 30, 40 years to figure it out. And you'll probably bounce on the positive side of this thing. It just statistically says you're going to do that. But when you're 5 years away from retirement, okay, and you're like 60 years old and you're looking at this thing, you're looking the gun down the barrel, you've got one chance to make retirement successful, and this is it. And if you start out retirement in a down cycle, like right now we're on a 10-year bull run, and if all of a sudden the stock market tanks, you are suffering for the next 20 years of your retirement. And that's really, like, if you started retirement in 2008, you went back to work. I mean, I can't tell you how many people I met literally come in my office, say, listen, I heard about you and I lost 40% of my money, and then I got out of the market, and the market started recovering in 2009 and 2010, in 2010, and I didn't put my money back in because I was so scared. I don't know what to do. I'm paralyzed. And I guarantee you there's probably hundreds of thousands of people who are listening to this podcast that will say, that's exactly how I felt. And because there's an emotional story to it. And for a lot of people, we're able to ride it out. We know what the market does statistically. We know how to do it, but we use tools. We used annuities and bonds and, pensions and Social Security and all the income features that create some sort of backbone that people could look to and say, hey, listen, that's what planning does, is it uses lots of tools, lots of investments, and encompasses the entire program. So retirement planning is the one area where I get a little nervous. The estate planning could be, in my opinion, something that can be done by Robo. Maybe not perfectly, but from a tax planning, numbers orientation, probably yes.
So kind of like the TurboTax for your estate?
Yeah, I think where the breakdowns would be is dealing with the emotional passing of assets to the kids or whatever. But if you want to deal with just the taxes or things like that, I think another breakdown might be, what kind of, if you were to have a long-term care situation, do you want to be in Ritz-Carlton, or, are you one of those people that say, I'm going to take myself behind the shed? Which I had a guy say that one time in my office. I was like, that's horrible. But that's one of those things that, I think technology can do it well. But the question is when you're getting a heart surgery, do you want the doctor to leave the room or not? Do you are you totally comfortable that the Robo has been successful 99 out of 100 times, and it's okay that the doctor leaves because you don't want to pay the extra bill?
Yeah, there's a difference between, so the Walgreens story and how those are set up currently to really convert into kind of these the
doctor's offices.
Doctor's offices. Say, I think these PAs are now, physician assistants are now really kind of taking a lot of the reins here. And anyways, we're going to get to some of these concepts. I'm going to circle back when we come back. That's like that. We're going to come back, and then I'm going to circle back. All right. So you are listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap. We are talking about iRobo, the evolution of the Robo Advisor movement. Where did it start? How does it work? What does it mean to you? Don't go away. We'll be right back. You're listening to Money on Tap.
Hi, my name is Ben Brayshaw, one of the co-hosts of Money on Tap. If you have questions when it comes to your retirement and are looking for a personalized solution, contact us at Brayshaw Financial Group. In today's volatile stock market, we can help you plan to find your successful retirement solution. Am I saving enough? Am I saving into the right places? Do my investments match my appetite for risk? Do I have a tax strategy that is going to help me keep more of what I earn? How can I maximize my Social Security income? If you are like most people, you are getting closer and closer to your retirement and may be wondering if you're taking the right steps. If you're in retirement, you may be wondering, am I maximizing my income while preserving my estate and caring for my family? We talk about all things financial in what we call three-dimensional investing, putting a plan around your financial future. If you feel that now is the time to start getting the answers to some of these questions for your own situation, give us a call at Brayshaw Financial Group at 855-226-8551. Headquartered in Bedford, New Hampshire, we have offices throughout New England and across the country. We would love the opportunity to show you how we can help. There's absolutely no cost or obligation just to meet with us, and we welcome you to our office. Call us at 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap, your personal finance headquarters. We bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance brokerage and fee-based planning. That's what we're doing here. We're bringing to you a fully independent planning perspective to the table. We're having a great time talking about Robo Advisors, iRobo. We love Robo. We love technology. We embrace it. It's what we've been doing here behind the scenes for you for years, and now technology has allowed the general public, so to speak, to kind of grab hold of things that are going on behind the scenes in the investments and make it their own. I mean, easily, for low fees, low cost. You can do it yourself. You can go grab a robo platform and start throwing money at it. And basically it's going to ask you, hey, what do you want to do? Do you want to retire? When do you want to retire? How long is that? And if in this period of time you have $100,000 in it and you were to lose 25% of that and your account now says $75,000, are you okay? That's one of the questions it's going to ask you. And that's what it's trying to do there, is it's going to try to pin down your risk. And we do that all the time. Every person that walks through the door, we have to engage in these conversations and try to understand these. So once that's established, it's going to try to put money to work for you in, low cost index funds is generally speaking what it's going into. But based off of your risk paradigm and your time horizon, it will try to accomplish those goals. Now, what does that mean? I mean, to take a kind of one step further, the standard understanding around this is that it is going to use mean variance analysis as the process of weighting risk, how much up and down you can take, against expected return, typically based off of modern portfolio theory, which is not as modern as it used to be. There is the more risk you take, the greater the potential return, is what it's typically saying there. The more volatility, the more up and down. So that
we've had lots of conversations about what kind of risk you can take versus what kind of return, because I mean, Seth, there's so many different perspectives on that. But anyways, we get into this technology piece, and I know I'm interrupting you. Sorry, but
how dare you?
I know, sorry, but I mean, the thing is that it's using all this historical data, and one of the things that I think is broken in some of the robo world is that all the historicity of all the investing of all
that's not a word.
It is in my world. Historicity. I had a teacher use that word. I always wondered if it was one, but he did. But all of that investing concepts buried into a technology program is looking at all the wars, the politics, the this, the that, the movement. But the thing is we have this baby boomer sector. And it's third.
Hold on 1 second. I want to just ask one question.
What?
Do we use this historicity? Is this what we do? Do we take a look at all of this data, and do we use technology to try to mine that to the best of our abilities, to understand that, to be able to put clients in the best position possible? Is that
we do? I mean, that's the thing. That's where the doctor steps in and says, hey, listen, there's a little bit of a different kind of twist here going on. And this is a different scenario. The heart's not quite on the left-hand side. It's more on the right. And we need to adjust things. And I think that's where you need to be able to kind of, for lack of a better analogy here, is just like a sailboat. It's like we need to adjust the sails. And you need to say, hey, listen, I want to catch more wind inside maybe some lower risk items. Like look at what, the treasuries did 19.8%. Against the S&P did 2.5%. I mean, wow. So you need to understand that, some of these baby boomers and some of the concerns and some of the tax events, they're driving different amounts of gusts of wind inside your performance, that just trying to see if you can get in front of that wave is really where you want to be. And, some of these robo-advisors, I think, take advantage of that. And some are just like, hey, listen, you put this much percentage in small cap, this much in mid cap, this much in large cap, and this much in bonds, and off you go. Because you said you were a moderate investor.
Yeah. Well, I mean, there's using the doctor perspective, you can go to the grocery store. I have one in particular here that I think of, and it's got this machine called the Higgy machine. Have you seen this? Higgy?
No.
Well, it's right next to my pharmacy. So anyways, I can sit on the machine. I can put in my information, and it's going to go ahead and take my blood pressure, my weight, I mean, my scale today is going to tell me what my body fat percentage is. So we've got all these tools, and that's one of the things.
I thought mine was broken. It was a 0.
Yeah, that's not. Yeah, that's not good either. But we've got all these tools. I mean, there's no. I don't have to go to the doctor for everything. And this is one of those perspectives that we take, is when we say we embrace this technology, and we're grateful for this, because it does make our world a little easier. So when we can get into the what is going on specifically in your situation, we can take this into account as a portion or a piece or a part of putting it towards that goal. And it like you're talking about the muni bonds, government bonds, all of these other sectors, and how do they interact, and what are the headwinds, what are the tailwinds? That's not what this is going to do. It's just going to take kind of this macro global, supply of data that it's going to try to pour into for you for this one specific type of a solution. And that's typically based off of your time horizon, your risk, and what is your goal? Like, ultimately, how much income do you want, and do you want to sustain that in the end? Now, one of the things that we've talked about is risk. Huge part.
Yeah, but Seth, the closer you get, see, this is the thing, the closer you get to the goal of the target date that you want to be at, the more risk you actually take on, right? Because now it has to have achieved. And as you get closer and closer, so when you're 25, Seth, the target date doesn't really matter.
This is going to be a little sarcasm here, because this is because I've given the risk over to the Robo Advisor. The Robo Advisor takes on that risk for me now. And I trust Robo Advisor.
You trust them, okay? So, but that's the thing, right? I mean, this is where the doctor in the room comes in, and right. I think most financial advisors won't take somebody that doesn't have $100,000. I mean, or a couple $100,000. That's kind of like, that's the entry level, meeting your first guy. I've started this.
Typical time value equation. We've got 30, 35 years old and pay for the overhead and everything else.
Yeah, you left a couple jobs. You got a few 401ks lying around, and you're trying to consolidate things. And you said, "Hey, listen, I've been in this robo world, and I'm okay with that for the most part, but I really want the doctor in the room so I don't lose half this money. I don't want to have a 2008. I heard about that. My parents had to go back to work, or they lost a ton of money." Mm-hmm. And that's kind of where we step in. But I think for people who are listening today, right, this iRobo, this iRobo show. And this won't be the only show we do on Robo. We're having a continuation of the show because we're running out of time here. But in 2015, we had $60 billion in Robo. Robo Advisors hit $60 billion. It was a huge number. They're now projecting that by the end of 2020, we're going to have $2 trillion in Robo. And in 2025, they're projecting, based on growth rates and so forth, to be $7 trillion in Robo alone. And that's not saying that the doctor's not in the room. That's just saying that you may be using Robo on some level, at some capacity, with a doctor sitting there saying, "Hey, listen, now we need to get out. Now I need to step in and take over." And that's where I think the most powerful influence is. And you can actually, as an investor, buy Robo, buy an advisor for less money than just buying the advisor. Mm-hmm. And that's where the market's going, in my opinion. I think the Robo Advisor is better in the hands of the financial advisor in a team effort, in a coaching, player kind of relationship, than it is as just a bunch of kids playing street ball out there.
I want to jump into a few takeaways here.
Yeah.
So there's some keys, I think, that we want to try to pull out again. Is that Robo Advisors are basically digital platforms, provide automated, algorithm-driven financial planning services with little or no human supervision. I can do the same with a bank. I can go get an online savings account, or I don't need somebody to go ahead and do a lot of what I need to do for myself financially when it's just putting a couple pieces in play.
Yeah,
right?
Seth, and one thing I want to talk about next week, and remind me about this, is that I want to talk about the liability for the consumer on the Robo world.
Yeah. Yeah. Robo Advisors most often automate and optimize passive investing or passive indexing strategies that follow mean variance optimization. We talked a bit about that. Robo Advisors are often inexpensive, require very low opening balances, and nearly everybody can benefit from a Robo Advisor if they choose. I mean, that's pretty much like the three things there as far as what Robo Advisors are, how do they do what they do, and can you participate? Yes. Mm-hmm. Yeah. And we're grateful for that. Well, that's going to do it for at least this segment. Clearly, we really enjoy the topic, and I can't wait to bring back more about how does this integrate in terms of your financial plan.
Ultimately having a successful outcome. Next week, we're going to be all about the pros and cons of robos.
You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Thanks a lot. We'll see you next week.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.